All right,
Yeah,
well,
you'll
I guess we can get started.
do it.
Cool. So, welcome everyone to our Hangout with Pyth. As I'm sure most of you are aware, we use Pyth every day for our decks. They are critical infrastructure for Lifinity, so it's great to be able to chat with you guys.
Thanks for having us on, and thanks for making this happen. Yeah, we're huge fans of Affinity as well. We're glad that we're able to support what you guys are doing, and we thought it'd be fun to hang out, answer a few questions that the audience may have about the network, and just uh, just chat about whatever's topical. Uh, so my name is Edward. I lead growth and strategy at the Pyth network. I've been full time on Pyths for about since about January. Had the pleasure of working here with Mark, who you'll never guess where he's from his accent. Uh, before Pyth, I was on Project Serum for about a year. And yeah, it's been an absolute pleasure.
Triangle. So Mark, Quantity, like Pima is pretty much the French slang. In French slang, you just reverse the word. So from Mark, it went to Kima on the online. I've been working on Pith for like last April 2021. So 1.5 year, it like, flew so fast. It's amazing, and doing pretty much everything that's non-technical. So you'll see TMing in the Discord, in the Telegram, um, doing a bit marketing, a bit of like kind of growth, finding new users, making the product better for existing users. So pretty much anything that's not coding, you can always ping me about it, and I can try to do something.
Awesome, thanks guys. Is your team like pretty global, would you say?
Uh,
Mostly, we have we have a little base in Portugal. Um, we have a few people in Singapore, and we have also a few in the Americas, whether North or South America. So yeah, we're pretty distributed. And here you have Ed, which is more US time. I'm Europe time, and Mario is Asia time. So we it's kind of, at least for the front face, at least it makes sense because you always want someone to be up or be available. So yeah, that's like as soon as you have a minimum of kind of people spread around after, you can even concentrate. Like if all the devs are at the same place and all, but so far we've been managing well on spreading around the world. Where are you? Where are you? Where's the Lifinity crew based in the world, pretty much?
I think we're in various places. I happen to be in Japan. And actually, on that note, I I couldn't help but notice, Ed Crypt, that your picture, it looks like a Japanese vending machine next to a Japanese electricity pole. Is that what that is?
that is correct. You're the first person I think ever to have realized both of those facts. Yes, my profile picture is a vending machine. I don't think there's anything too symbolic about it. I just really like those vending machines, but sometimes as I'm running the rounds in the server and making sure people's questions are being answered during my Canadian hours, as Mark put it, I sometimes do feel like a vending machine, right? I'm just here to get people what they need. And in the case of Fifth Network, we're here to get you the data that you need, and with me and Mark, we're here to get you all the information you need about the Pyth network. So I think it's quite fitting.
Wow, so smooth tying it in with the fifth.
What what does your machine sell on your picture? I've never paid too much attention.
When does the what start?
What does it sell? Your machine?
What does it sell? It sells
Yeah.
love and good vibes. It's up soul.
If only good vibes were so easily accessible.
Well, that's what we try to generate here at the Pyth network. Um, I think that's one nice thing about the Solana ecosystem. People are pretty chill. People are serious about building. People know how to have fun. And you don't have like some overwhelming, disgusting sense of like aggressive tribalism that you may see elsewhere.
Yeah, agree. Hopefully things stay that way, even as Solana gains more recognition. I guess we'll see.
Yeah, I hope so. I hope so too. I hope so too. I think the way forward is to be open-minded and accepting of all changes, right?
Yeah.
I think change is inevitable, and we try to be a bit chain agnostic at Pyth Network too, because we will go cross. I mean, we are going cross chain with Wormhole. We're deployed on BNB chain for testnet and devnet, um, and the implication is that we basically have every other EVM compatible chain in sight. We're deep in talks with them. We're going to be deployed there soon, and once that happens, the whole world's going to find out. But basically, the fair rule of thumb is if it's fair game for Wormhole, then it's fair game for us.
Nice. Actually, on that note, so like one question that we commonly get is whether we're considering going cross-chain. And usually our answer is possibly, but that it would involve a lot more complexity because part of the reason that we're able to work so well on Solana is the low latency of the block times. And once there's more lag, that makes us more susceptible to front running. So when Pyth goes cross chain, does that mean that basically you would provide a price update in every block? So basically, same as Solana, just uh, slower speed to match their chain?
Overall, we'll keep the Solana standard, let's say. So we'll keep updating every price slot. And for cross chain, well, it will pretty much also depend on the chain because, as everyone knows, like Ethereum gas is pretty expensive. And if we stop publishing on each slot at the end of the day, I don't know how much it would be. Actually, today might not be that expensive given how low are the gas fees. But it might be more initially kind of as a request base. So like you can imagine the whole flow from Solana prices to wormhole will continue, and like applications on any non-Solana chain will be able to, I need the price now, and you get served the latest price from Solana. So it's a bit more nimble, so that like you need a price, you can query it whenever you. So it won't be, we won't kind of like maintain strictly the update on every block on other chains. But then if users want to help cover this, it might very well happen. Like think of like BNB chain or things where like gas still remain low. Wouldn't be shocking that, let's imagine you have 20 protocols using Pyth. After it can be kind of you could imagine a pool where people kind of collectively pay fees. So like at the end of the day, you could get updates in all the blocks of your chain for relatively low cost. So this, I think, it's how it's going to go down. And then I think because you also already have somehow another topic, but you could already kind of play around Pyth updating on Solana and front running, let's say, other chains Oracle that don't update or that update every half hour. So this is, and a few, I think, individuals are actually on themselves front running oracles, whether it's on synthetics or things like this. So we'll see how it goes in practice, but overall, that will be the design.
Got it. Thanks for that. Yeah, I forgot to consider that it costs fees to even put the data on chain. And Solana, it's so cheap that it's not a lot, but yeah, it can become pretty pricey on other chains.
And actually, I wonder for Lifinity on other chains. I guess EVM, you have a huge risk or potential risk of like gas walls and just being front run, not even so much on the price, but almost like just being sandwiched, which is I think super like risky. Do you think that kind of Liffinity's potential is greater on non-EVM chain, like the next AMM on NIA, like it's Rust based? I'm not a NIA, like I don't have deep knowledge on NIA on other non-EVM, but I guess you have much less kind of sandwich attack possibilities.
Correct me if I'm wrong. My understanding of sandwich attacks is where, well, you as a trader place a transaction, and then that transaction is sandwiched so that you get worse execution. So like it's a trader's problem, not the DEX's problem. And the trader can mitigate that by specifying the maximum amount of slippage so that a sandwich wouldn't work. So I don't think sandwich attacks would be a problem, but yeah, front running the Oracle updates I think could be a problem, especially like on something like Ethereum because they have a mempool. So like the next Oracle update is publicly visible before it ever goes on chain. And there's probably plenty of time to form the transactions. For example, like they could buy ETH on Lifinity on Ethereum. And then because they know that after the Oracle update, the price of ETH is going to go up. So once the price goes up, they just sell the ETH back to Lifinity at a higher price, and our pool has been arbitraged with itself essentially. So I think that's the type of risk that we would have as a DEX.
Yeah, makes sense. So yeah, pretty much if going cross chain, you'd have it won't be so much like cross chain arbitrage, but rather have your own pool, like Lifinity pools on Ethereum.
Yeah, I think that's where the risk lies, especially.
Makes sense. And how do you envision it? Is it more right now kind of expanding what you trade on Solana? What's kind of the next big, let's say, evolution or expansion for Lifinity in mind?
Yeah, so right now we don't even have many pools yet. So I think step number one is just increasing the number of pools. Part of that involves making custom oracles. So, for example, for MSOL USDC, because so Pyth has an MSOL oracle, but the amount of trading volume for MSOL on centralized exchanges is pretty sparse. People just prefer to trade Sol rather than MSOL, at least right now. So what we do instead is use Pyth's Sol Oracle, which has very robust trading data. So we use that as a base and then adjust that according to the staking rewards that MSOL has accrued. And yeah, use that to create a MSOL USDC Oracle. And yeah, so we're like doing that and some variations of that for other token pairs. Let's see. So yeah, that's priority number one. I mean, like we still have liquidity from our IDO that we have to deploy. So that's why just opening new pools and deploying that liquidity where we can is probably the highest ROI thing we can do right now. Beyond that, let's see. So, and also I should say, like, partially the reason the difficulty with opening pools right now is that we're in a bear market and there's much less trading volume in a bear market. So we've tried a few pools, such as Mango and FTT, but unfortunately they just didn't have enough volume to make it worth it. So, but that may change in a bull market, and opening pools for them wouldn't be difficult at all. Wouldn't require any like customization or anything. So yeah, there's also this timing aspect. So yeah, just continuing to keep an eye on how the markets evolve. Other than that, one idea that's floated around is using or expanding our Oracle to use NFT oracles. So if we had a robust oracle for the floor price of an NFT, then we could, for example, pair that with the tech that Solvent has, where they fractionalize NFTs into fungible tokens. And so if we then pair the fungible tokens with Sol and then concentrate that around the oracle price of the floor price of the NFTs, then yeah, it'd be possible to provide a lot of liquidity very efficiently because we're able to concentrate. Yeah, I don't know if I've heard of that before, like concentrated liquidity for NFTs. The difficulty, of course, is like creating the oracle for NFTs. I think there are some protocols, but as far as I can tell, like the documentation is kind of sparse. So I don't even know like how they ensure that the oracle price is robust. So, but yeah, that's one idea.
I actually looked at Solvent yesterday, and to be sure I understand correctly, would Lifinity purely market make on, I think they call it droplets,
Right.
or but you can also let's say buy outright an NFT from the pool. And as I looked yesterday, these NFTs, like from Solvent, look to be cheaper than the floor price on Magic Eden. So is it really Lifinity? Would it be really about market making the droplet, or would you also envision on, oh, the NFT is cheaper than the floor, let's buy out NFTs and resell at the floor and capture that, like, I don't know, 1, 2, 3% spread?
Yeah, so part of the thing for us would be buybacks because our NFT project has buybacks already. And then just adding the droplets part just means we would able to do buybacks cheaper when that's available. So that would be part of it. But the reason for the creating the liquidity, so it'd be nice for our protocol to have that, or like any NFT project really. So like being able to offer this to other NFT projects, that would be really cool because like basically NFT projects um, don't have, I mean, they don't have this type of liquidity, right? Or like not any robust one. Like especially on the buy side. So like if there's a bunch of NFTs listed on Magic Eden, then you could say, okay, there's a lot of liquidity right now because the floor is thick. But on the buy side, I guess it's possible to for like people to place the I'm not sure what they're called, like basically limit orders, or it's like for a listed NFT, say like if you give me this much soul, I'll buy it type of thing. But it's like not aggregated, so it's kind of on a peer-to-peer basis, basically. And yeah, wherever you can aggregate things, it more often than not makes things more efficient. So if they're able to aggregate the liquidity into a pool, I think a lot of projects would be interested in that. They also are able to capture the fees through that. And Solvent also has some other things you could do. One is where you can swap your NFT for a different NFT in their bucket for a fee. So that's also another way to generate revenue and also provide utility where for a small fee, people can swap their NFT for another one they like more.
Yeah, and as you mentioned, like Oracle pricing for NFT, even floor, like requires so much thinking because, as you mentioned, first time it like comes to mind is Like it's easy to read, let's say all the bids, no, sorry, all the asks, so all the listed NFTs. But yeah, then what happen if someone make a 50% discount bid on an NFT listed, it gets failed for whatever reason. Like, so it almost kind of a mix of, and that's actually how like our price feeds are like for, let's say, more traditional assets are being made. Like it's from exchanges, you get kind of the order book because they own their own order book and the data within. And then you have traders who own their fields. So it's actually a great, like, it's actually something to keep in mind as well as like NFT Oracle feed will appear at some point on Pyth. Like it's like as the whole network grows and like becomes like more and more decentralized and permissionless, it will be like pretty much anyone that owns Pyth and stake Pyth could become a publisher at some point. So there's like, I think it will be the way to get NFT pricing because it's like we're way more kind of um, aware or knowledgeable around, let's say, more traditional assets where you have, let's say, liquid markets. But I think it's going to be also something that we might put out like later this year, some kind of community work or dev work or quant work to kind of create even the first template of how to price an NFT. And like it's not like as easy as just reading the floor price as we mentioned with the bids, but also with Pyth, like you have the confidence interval. So there's also like because then once you have a price feed for NFT, like it can become a perpetual drift VAMM or synthetics or on Synthetify. Like it can be used in so many ways that we have to be also like super mindful on like how it's built, how it's aggregated, and how it acts like in like long tail events. What if someone lists like 20 NFTs at 50% below floor, things like this. So there's also the whole like, and I think it makes very much sense. Like confidence interval, even for traditional asset, makes sense. But for NFT, it's even better. Like you look at maybe 10% of the whole market, and all this theoretically could be argued it is the truth. And talking a bit confidence interval, does Lifinity leverage the confidence interval? And if so, how do you do it?
Yeah, we definitely do. Let's see. Reminding myself how we use it. Um,
Safety first, after all.
yeah, yeah.
My guess would be if the confidence usually some other application usually they would interpret it as if the confidence interval value is X% of the price, usually it's like it ranges from 1 to 10%, they will deem the aggregate price to be too uncertain and wait until the confidence interval goes back below, let's say, 1%. And until then, like no actions is possible. And just for reference, usually our confidence interval in normal condition is like 0.1% of the price.
Yeah, so I think what you said is what we do. So yeah, we only trade when the confidence interval is sufficiently narrow. So if it's like pretty wide, we'll just not trade until it becomes narrow enough again. Yeah, and this is basically to avoid front running or arbitrage. So yeah, and that's very helpful that we have the confidence interval for that. When it's just a single price point, it doesn't give you the information about like, so basically, I mean, the price point is an aggregation of all the data provided by the data providers, but just one number doesn't tell you how close together everyone's estimates are, and the confidence interval provides that variability. So yeah, being able to use that to add nuance to our trading decisions definitely helps. And as far as I know, like Pyth is the only oracle that provides confidence intervals. Yeah.
Yeah, and but maybe we're confidence interval maxi now, but it's kind of shocking, and especially in crypto, to not have seen this value metrics spinned up, because even if we still talk BTC, there's like 25, let's say, reputable, or maybe less, 15 reputable centralized exchanges, and BTC never trade at the same price. So it's kind of, I agree with you that giving only one price point, it's by nature it's wrong, because there is no single price for an asset, and I think we're still super early in how applications can use the confidence interval, because I'm like, we'll see many, as we saw kind of Lifinity kind of completely revamping the AMM world. I wouldn't be shocked if we start seeing like virtual AMM like Drift or Synthetify, like scaling liquidity based on the confidence interval. Like if you buy one BTC slippage, there's no slippage, it's the swap price. But if you buy 100 BTC, you'll like, your entry price will progress go into, let's say, the higher band of the confidence interval because you're buying. So I think we're still like, as a security safety measure and show of certainty is amazing. It's already great, but I think there's definitely a next leg up in innovation around how to use this. It could be, you could even imagine, likely you'll need to run some back testing on it. But normally, as volatility increases, up or down, confidence interval widens, because like not all trading places like go at the same speed or are arbitraged by the same people the same way or in the same efficient manner. But it could be a proxy for volatility. So I don't know if we would need to run kind of a VIX comparison against the confidence interval relative value, but I'd be like, we could envision someone creating a perp around just the confidence value, showing, let's say, what's the Pyth uncertainty perp or something.
That'd be interesting. Yeah, actually, I was gonna take it there with its relationship to volatility, and I wanted to ask like whether you knew like the correlation between the confidence interval width and the current volatility, because yeah, one thing we're trying to implement is volatility adjusted fees. And the question is, how do we determine the volatility? I guess the obvious answer is to just use some form of historical volatility of the price. But yeah, if the confidence interval is also indicative of it and like indicative of current volatility, was wondering if like maybe that would be an option to implement.
Likely, well, it needs to go under thorough quantitative analysis. I'd guess that confident, like long term, I'd guess, yeah, just historical price evolution is somehow the best proxy for volatility. And as of right now, we're working on making a public historical database available. So, like, not too far in the future, everyone can have access to all time piece prices that were ever pushed on chain. So anyone will be able to run with the public prices any kind of analysis they want, pretty much. So likely we'll start seeing people creating their IV calculation based on this, but it might be short term. Like, so if we talk seconds trading, I'd guess the confidence interval would be a great proxy, but I think you still have some occurrences where it's not so much about volatility itself. Because, for example, if we look back at as Luna went to zero, pretty much like when it started being under $1, like all the exchanges, so pretty much Binance FTX for hours, they were trading like at 2 cents. And you had Huobi OKX at 40 cents. Like Huobi OKX, like the classic, we suspend withdrawal, so there is a massive arbitrage to be made. And in this case, Pyth price, like we look back at it, did a post-mortem on it, and the aggregate price followed the lines of, let's say, the FTX Binance pricing, because most of the volume were there. The traders that are also publishing data to Pyth, like were doing most of the volume there. So the theoretical true price was more around 2-3 cents. But given that we have Huobi KuCoin on Pyth 2, like we had inputs and which were true. Price is 40 cents. And if you look back at the Pyth price for Luna, you'd see that the aggregate price was 2-3 cents. And sometimes the confidence was like 10 cents, like 5 times the price. Might be even up to 20 at some point. And like when we look back in time, it was like, yeah, like you could argue that one Luna could be exchanged within this super wide confidence band, because like two of the biggest worldwide exchanges were actively trading at this price. But then would this high confidence band period experienced on Luna USD price feed would show volatility? I'm not sure. So that's why I think there's a bit more assumption around creating volatility based on the confidence interval. Like excluding this kind of event where you have active arbitrage, I think it could be a good proxy, but not 100% of the time.
Gotcha. Interesting. So there's like some edge cases basically that you need to keep in mind.
And yeah, because you can also envision it also as a security. If like as we, let's say, become permissionless and someone become a publisher, so he has to stake Pyth, so he will have like financial risk acting badly. But if they do, let's say they send this asset's worth $1 billion, while it's worth, let's say, $1, like the whole aggregation mechanism we have aims to first remove the outliers, but also be robust in kind of those cases, so that it would require an insane level of collusion to print a bad price. And so rather than print a bad price, the intermediate stage would be printing a good price, but the confidence interval would widen because maybe 6 or 8 or 10 publishers on BTC are acting maliciously. So I think it's also like it's very versatile. So it might not be in the, and after we'll see how it evolves over time. Because as soon as like the goal down the line is to have like 200, 300, 500 publishers, and like if you start having 200 publishers for BTC, I'd imagine all these edge cases kind of fade into irrelevance because the coverage is so big that like those like couple edge case or location where insane things happen would just be disregarded, because the overall consensus, the overall market consensus would put it on a more like would be more conservative, pretty much.
Got it. Yeah, we'll keep an eye on how that develops. Also looking at your exponentially weighted moving average. Yeah, whether we can use that for a proxy for volatility somehow.
Yep. So EMEA, yeah. After also there can be some interpretation around this. So first we have I think it's a 1 hour EMEA, but when you put an EMEA, like if you chart it, and we have a blog post about it, pretty much like the last 30 minutes has like over 90% of the weight. And usually like most of the trading, maybe it's more traditional trading, but most of the traditional trading firms and applications prefer EMEA over simple moving average. But like we have many options protocol that use Pyth for expiry settlement, and like the benchmark in the market is Deribit. So you'll also see new values like like extra values soon enough on Pyth price. Likely you'll be able to get like a 30-minute uh, TWAP, but TWAP simple moving average. So every single price point will be equally weighted and not overly weight the more recent one. And it's pretty easy to kind of spin extra values because it's just calculation from on-chain data. So like you could imagine extra values like 15-minute TWAP, equally weighted, 30 minutes, 1 hour, stuff like this. So like the whole ideas, and I think also the historical database is gonna bring like is gonna open up the door for many kind of new development on how to leverage the piece price. Like you don't like your 30-minute TWAP, all right, you just connect there and create your own 1-minute TWAP. Or like for example, there's other I'm digressing a bit, but there is like, for example, Zeta markets, they do their settlement. They pick any price within 10 seconds after 8 a.m. You could imagine people picking the 10 prices after 8 a.m. and just taking the median. So you also kind of increases security of what happens if there's an outlier straight out, like straight after 8 a.m. So I think like there's like I don't like saying this, but we're early, not so much into crypto, but into all the fine development around Solana DeFi and Oracle network, I feel.
I mean, if this is early, I'm excited. Much more goodies to come. So I asked our community if they had any questions for you. So I was wondering if we could ask you a few of those.
Yeah, let's do it.
Sweet. All right. So first one we have from Me Pygmy. They ask, they'd like Pyth to give us an update on their collaboration with Jump Capital. Are they still working on HST being possible on chain? That is NASDAQ type exchange.
HST,
HST. I'm not sure what that is referring to, but
I am also not aware, so I'm keen to have I'll look at for the questions and follow to get some links. But pretty much first, Jump Capital, if I'm aware, I think they stopped it. They kind of, everything's under Jump Crypto now. They still have their big, like it's Jump Trading remains like the top 5 worldwide trading firms. They're still highly like Pyth network. We have a Swiss association, the Peace Data Association, that is the kind of the key driver. Like you could imagine, the goal is like to somehow like not replace, but be like the Ethereum Foundation. Like you were like all there to contribute to, let's say, the network growth, the protocol growth. In this association, we have, I think, over 25 members who are some of the early contributors, often publishers to the network. So you have Jump, you have Jane Street, you have Virtue, you have LMAX, like you have all these kind of big US trading firms, US exchanges. But no, yeah, we're lucky enough like to have like those like Chad crypto companies now they do crypto whether trading or developing. We'll still receive an insane amount of support from Jump and actually other publishers. Like we had a handful of publishers that hired engineers specifically for contribution to it. So we've been lucky enough to like maybe receive, I don't know, more than 20 full-time like external contributors work, and this mostly coming from publishers. But yeah, we're still like with great connection, luckily with all the biggest firms, yeah, Jump being one, and yeah, like as it is with Wormhole, they're really committed to it because like if you put yourself into a trading firm shoes, like it's kind of, I won't dive too deep into the market data business and market data structure, but pretty much all these trading firms, they trade billions and billions on US exchanges. Um, and like a US exchange, pretty much like 13 of them, they are like US regulated ones by the SEC, by the government. And pretty much to be able to trade there, you have to pay connectivity fees. And this fee is like $500,000 to $1 million a year. And down the line, it's a centralized exchange, a US centralized exchange. It just sells its kind of order book technology where the trader will fill up the order book. So, like for a long time, traders were like, without my bids and asks, your exchange is worthless, or the data you sell us is worthless because we are the one kind, like you derive your data from our work. And like the whole Pyth idea was kind of originated from this, like, oh, actually, let's say I'm the biggest trader in the world, like Apple stock, like most of the time you're not long or short. You're purely, whether it's arbitraging, wholesaling, whatever reason, but you make thousands and thousands of trades per second on a single stock. So they were like, we own all this data. So pretty much we can like create a new composite stream of market data from like proprietary information. And so that was kind of the kickstart of Pyth idea. I was like, that, and because retail wise, you and I all here, like if you go on internet and you check Apple stock, Google stock, all the price you see on Yahoo Finance, Google Finance is delayed by 15 minutes. So it's kind of a mix of the realization that traders own data that could replace, let's say, the exchange's feeds or even Bloomberg, and the whole idea of kind of leveling the playing field. No more, it's only the big traders that pay $1 million per year to get the live price, but everyone here can go on Pyth network and you open up the Apple USD chart and you have live pricing. And again, as we are, I think we are the first one to ever introduce conference interval. I guess we also are the first platform like Web3 or Web2 that offers live streaming prices for equities. And like I'm insanely proud and supportive, and like it's an amazing kind of contribution you can do not only to DeFi protocols, because like you'd see, if you check, no Oracle offer equity price feeds because like they don't have access to the data and they don't want to pay $1 million for it. Pyth's the only one, but also for the whole kind of retail community, whether it's GME AMCA, for all the like Wall Street boys Reddit crowd, like it's insanely valuable to provide live pricing for these assets. So it's kind of a mix of like reshaping the data structure, how it flows from creators to users, but also empowering the whole world, like whole kind of retail community.
Yeah, no, it's truly incredible that you guys have gotten all these huge firms to essentially work together. Even though like traditionally they're probably viewed as like competitors to each other, and like normally you wouldn't want to share your data, but yeah, you guys created this awesome product where it makes sense for them to share their data, which is awesome.
I think it's almost you could see after like it's there is a US exchange that was created. It's called MEMEX, the Members Exchange, and it's not the same idea, but it's kind of the same reasoning. That all the biggest traders were like, "You exchanges make too much money out of our pocket. We'll create our own exchange," and it's kind of removing the middleman is one of the beauty that like blockchain enables. Like you can just directly go from the source to the end user, and like all these guys really understood the value directly. Like all these trading firms that millions of data. They understood the value behind being kind of data creator, and I think we like, and after it's kind of a sociological or psychological event where, like, if you see your competitor do something, like, for maybe for no reason, you'll be like, if he does it, I need to do it. So it was really incredible to, as we onboarded and we started with kind of the big players, GTS, Virtue, Jump, like all the, let's say, subsequent trading firm were like, if they do, if they do it, I have to do it. And it's all like, they're reaching out to us now to provide data. So it's very cool to see the market fit. And after, yeah, we've been mostly talking like US stocks, FX, it's a bit the same. So far, we've been looking crypto because like all the exchange API are free. Most of the data is like instant and everything. But what happens if it stops being that, such? And like an FTX API is still less, I'd say, sexy than a FTX quote on Pyth, because of course you could get the spread from the API, but here you already like kind of packaged into each other. So that's pretty cool. And I think the whole economics around the Peace token is also kind of like, it was really, we put a lot of thought into it, and it resonated with all the publishers of like kind of a free market. Like, you stake this token so that you have a financial interest, you have a financial vesting interest in providing good data. Because if you give bad data, you'll get slashed. And if the better the data, the more rewards you'll collect. So it was really designed, the interaction within publishers, within Pyth was really well, like, thought deeply on to kind of instill a continuous competition. And those guys compete, like, they trade for billions a day, all against each other, and they love competing. So that's very cool, and I think it clicked with them. And the whole idea after, we'll see as it goes live, but I'm very excited to see, it's going to be kind of the Oracle hedge that consumer can opt in, where like pretty much like the whole, first the free market. If no one pays data fees voluntarily, maybe like the system doesn't work. It's not like this price feed is not variable. But on top of it, introduce some kind of insurance to further tie the network together. I think it really clicked with the publishers, where yeah, they pay a lot for this while they kind of help creating the product, but also they understand the value of like how much people depend on those price feeds. And most of the time when those price feeds in the legacy world or even legacy Oracle fucked up, there's no repercussion to anyone, and there's no kind of insurance payout. So it's really kind of like full circle. And I think that's the best way to kind of achieve full decentralization and permission, like a full permissionless platform.
Yeah, I really love the mechanism design that's in your guys' tokenomics too. Actually, on that note, I'm interested to ask so two related questions. One is, how does the protocol detect whether someone uses Pyth's Oracle data? Because my understanding, so I'm not a dev, but my understanding is that like the data is published on the blockchain for anyone to see. So like I'm confused about like how Pyth can detect who is and isn't using it. And
So you're right, exactly. On this one, you're exactly right. It's all data is created on the blockchain. Everyone can query it. We cannot put a paywall on it. So how it will work? Not everyone will be entitled to an insurance payout. Only the wallets, because down the line it will be wallets on the blockchain, will voluntarily pay data fees on each epoch. Let's say the Pyth epoch will be a month. So let's imagine you're Lifinity and you want to insure for the sole price feed. You would, like, from any wallet, in the end, we don't care if it's your personal wallet or the official wallet of Lifinity, but this wallet ABC would voluntarily put, let's say, 1,000 Pyth token. Later on, it can be paid in other tokens like, I don't know, USDC or anything. You'd be able to, like, last day of this month, you drop 1,000 Pyth under the Sol USD price feed vault. At the end of the month, if, let's say, no claims of the price was wrong is issued, all these fees collected in this vault will be shared within publishers. And if there is a wrong price, we have a claim process using human protocol that will, let's say, prove an off-chain price. And if this price is wrong, we'll slash all the publishers that were in discrepancy versus the off-chain price, and all this slash will be proportionally given to the wallets that paid fees. So if Lifinity pays 1,000 Pyth and another protocol pays another 1,000 Pyth, pretty much Lifinity, the Lifinity wallet will have 50% of the like potential slashed Pyth tokens. So, and you could imagine a third protocol that uses Pyth price feed but don't pay fees. If the price wrong, it's unfortunate, too bad for you. No insurance because you didn't pay fees. So that's kind of also like how to drive more robust feed. By paying fees, first you get a potential hedge on the Oracle failure, and we'll see what it paid. But also, the more fees are paid, the more interesting the price feed becomes to be a publisher. If I don't know, there is 100K USD of fees a month on Solana feeds, like everyone's gonna rush there to be like, okay, it costs me, I don't know, 1,000 USD, whatever cost you envision to provide this data, but I'm getting on average, I don't know, 3x my investment every month in fees. And the more fees, the more publishers come, and the more robust the feed becomes. Like the less likely it will have a failure. So, like, so it will really be wallet based, and you could technically, like, you could not use the feed and pay fees. And Oracle failure, you have no application. Like, it's like there won't be a KYC. So, like, you could almost kind of short the reliability, if we could put it this way.
Right, got it. That's pretty interesting. It's very different than what I had assumed. I have to think about that more. Yeah, really interesting. Um, so,
And one thing to mention is no, actually that was irrelevant here. Sorry.
all right, no worries. All right, I have another question from our community. So Henry asks, I would like to know from what minimums and criteria, parentheses, volumes, number of sources, etc., that Pyth decides to publish a feed, and more particularly on how they plan in the future to increase their number of tracked assets, especially if DEXs take some market share from centralized exchanges.
Yeah. So it will be how a new price feed is added on Pyth. It will be there is the current, let's say, environment, and there's the final state when Pyth is fully decentralized, how to add a new feed. So overall, any feed, it has a minimum threshold of 3 publishers. And when I mean 3 active publishers on a price feed, if we receive less than 3 quotes, one from each different publisher, we won't aggregate them, just to kind of remove like, you don't want to receive only 1 quote and this is your price, because it's like infinitely gameable. So our, like, for existing feed already in production, whenever it's below 3 feeds, it doesn't update the aggregate price. Right now, to add new feeds, given that below 3 the feed is unusable, and that's just bad UX and risky for any protocol to have a stale feed. So pretty much our minimum threshold today to kind of start kickstarting or searching or further exploring if we can price this is to have like 6 different publishers, pretty much. Somehow you could publishers and sources, as in sources I mean more as like marketplaces where this is traded. Somehow it conflicts a bit, but not so much, because if a token is on all the big centralized exchange, like first all these exchange can provide their data to Pyth, but traders are much more active on centralized exchanges, and one publisher will likely look at all the centralized exchanges for the same coin, and so we will have like a full kind of market coverage. But overall, like if we manage to have at least 6 guys able to source X token, we are like we're fine adding it. After there's always like kind of request and demand. How much value does this price feed kind of bring? Like we don't take any cut, but how much kind of TVL or activity or how much does it help the protocol? So that's kind of the second stage of like pure demand based. And after, once let's say we are okay, we'll list X token next. We always like have a thorough kind of reliability testing. We also released a blog post, I don't know, 2-3 months ago that explains how we do reliability testing. But pretty much we'll have those 6 or 7 publishers that are able to solve. Maybe there are 12, but from 6, we start running like a 3-4 days reliability study to see how correlated or not publishers are in between them. And like that's the thing, we really don't want to have highly correlated publishers, because if one thing moves somewhere, pretty much all the publishers will act the same way and you lose a bit of robustness. So pretty much I think the standard is that we have an uptime of like 99.9% or 99% before releasing into mainnet. And after, I won't be able to tell the exact value of correlation, but we have another threshold purely on how reliable the price itself is. So that's kind of the current way how we add new price feeds. Are we able to source it? Is there demand? Then we check, are we able to source it? If so, we start, let's say we create the product and we start onboarding publisher, and whenever we can, we run this test. And like we've been growing a lot, so there's always kind of allocation of resources of, if you have multiple devs working on this aspect of new feeds, you kind of reduce, even if the team's big, you kind of remove a bit of potential workforce from the smart contract kind of building, like the remaining features. But that's kind of the current stage how we do. In long term, like it will be fully governance based. So we'll spin up, like we'll have a whole kind of classic form where I will have template for new price feed requests, so that like anyone will be able to submit any idea. I want this price feeds. This is where it's traded. Liquidity, you mentioned liquidity. We don't have a hard cap threshold, but if it's like 10K USD, we liquidate like volume per day. Like you'd wonder if it's actually valuable to have this token in the first place, because like pretty much no one use it, or at least no one's traded. But back to the governance, it will be forum post pretty much. You kind of list whatever the history of the coin, where we can source it. One thing also is that as it goes live, likely we'll have the incentives mechanism also like following, so that you could say you're a founder of a protocol, or you just like a protocol a lot and you want to see a piece price feed. You could say, I'm willing to contribute, I don't know, 50K USD worth of fees for the next 6 months, 3 months, 9 months. And so that will kind of signal to publisher that are able to quote it, they'll be like, okay, this I can quote. They kind of offer incentives for me to get onto it. I'll vote yes on the governance. So that's kind of the whole idea of like long term. It will fully be governance on like, and maybe a product could be created, but then if there's no incentives, no one's going to publish it. So like we'll have a thorough governance forum and governance process for this. That's kind of how we envision it long term, like really kind of almost as like Airbnb. You like you have a request yourself, you go on the website, you put in your kind of filter, and then you have people offering this. And so here, whenever like we'll have this, publishers at some point will become like it will become a permissionless process. So you and I, we could have a bot, or we kind of build our own Oracle or price aggregator. We get some Pyth, we stake it, and we start publishing data for this. And like that's really long term, like open, free data marketplace where if you want something, you can attract people by signaling your paying fees, or yourself, you directly become publisher, and even if there's no fees, you can contribute. And likely, I wouldn't be shocked if like we see a few DAOs of NFT, like the Monkey DAO or any other NFT, or even like DAOs of other coins. I don't none come to mind, but is there a Solana one? But we a good one. But you could imagine pretty much anyone, any protocol, NFT or DeFi, be like, it's worth it to have a price feed. So I'll kind of put this on the line to interest other people, but also I can get Pyth and provide data for this. So it's very like whole idea, and I say it all, I think in every space, whole idea is almost for the Pyth team to be able to die and the network to continue working like perfectly fine.
It's a bit morbid. I think it gets the point across.
Yeah, thanks for that. Thanks for the very thorough answer. All right, well, those are all the questions we had from our community. So, and looks like we crossed the hour mark, so maybe start closing now. Is there anything you guys or that we should keep an eye out for that you guys will be releasing soon?
I think for the multi-chain maxi, I think one of our upcoming exciting developments, and we mentioned about it earlier, will be going multi-chain or cross-chain, depends if you include Wormhole being a chain. But I think if you use, like if you're a Cosmos aficionado, if you're a BNB one, if you're a NIA one, I think it's like you'll likely see us there, not so far out. And after, I think like we're gradually roll out deployments. Like first, likely will be governance, then we'll have publisher staking, and these are not so far out. So, and we'll finally have an oracle where people can like even non-protocol can interact with the protocol by delegating and doing stuff. So this remaining of year will be exciting on this front, like actually putting the Oracle network into the community's hand through delegation and all these. But first, yeah, I think cross-chain is the thing, is the most exciting thing we have. Do you have anything else that excites you, Ed?
Who, me? Did you say me?
No, Ed.
Okay,
Do you have
that's what I thought.
any?
I
Okay.
couldn't tell. I thought you were referring to Durden. Gosh, I mean, yeah, cross-chain's a big thing. But everything that you've read about in the white paper will also be coming. So that includes the token distribution event, that includes on-chain staking, includes governance, all that good stuff that makes the Pyth network a features complete system.
Awesome. Yeah, obligatory when token. uh,
With two
When
servers.
it's needed. Yeah, when it's needed. We've seen too many protocols token. And well, anyway, we see the price action, like Lifinity price action during this early bear has been amazing. Like it it trades like a stable coin. It's been like at the 50 cents mark, strong, and because there's utilities. It's kind of our approach around it.
Yeah, no, it's incredible how much utility your product provides to the whole Solana ecosystem. It's really awesome. Um, and yeah, just to reiterate, we really appreciate it because we wouldn't be able to run without Pyth. So yeah, thanks for everything that you guys do.
Our pleasure, and we appreciate you guys. If there's any price feeds or any new features you want from us, just let us know. We'll try and make it happen.
You heard it here first,
We're gonna be on
community.
Infinity. When Infinity USD price feed.
Yeah, unfortunately, the only place you're gonna get a price for Lifinity from is from our own constant product pool. So
And thank you to Lifinity for finally making AMM intelligent. Because I think it was a conversation I had yesterday. Was will we have AMM in 20 years? I don't no clue where we'll be in 20 years, but it feels like it's an amazing tool for very nascent product, like pure price discovery of something that was just created, but long term, like for big trades, you'll never see, let's say, an institution or a big trading firm making like a 2000 BTC swap on an AMM. But finally, with Definity, we have like I don't know if you call it V2 AMM or how you want to call it, or kind of like PMM, proactive market maker, but it's insanely cool to enable that kind of evolution. Like that's kind of the whole goal of Pyth. Like, of course, we want the Pyth network itself to be strong, but like it will be stronger. Like it will be strong because amazing team build amazing products on top of it, and like we also say, like for now, people don't use Pyth directly, like the community. They use product that use Pyth, and down the line, your success is somehow a metric of our success. So that's kind of how we envision things.
yeah, no, 100% agreed. Handshake emoji. All right, well, I guess we'll bring this round to a close. Maybe we can do another one a few months out. But yeah, thanks for coming on. It was really great hanging out with you guys.
Our
Thank
pleasure.
you so
Thanks again
much.
All right.
and for
We'll
the
do the return game. We'll do the return game in the Pyth Discord, and we'll do a focus this time on whole affinity.
Sounds good. I'm
absolutely.
down.
Haven't already? Come check out the Pyth Network Discord.
Thank you so much for having us, Jordan.
Yeah, thanks for the idea and thanks for coming by. Talk to you later.
One, great weekend. See you.
Have a good day, guys.